Welcome to Java. Thank you kindly for joining me again. It is January 30th, 2025, and it is also Thursday. We did have another great discussion last night on our Discord. We did have Truth Warrior join us as well. We've got some great people that come in there. So if you would like to join us, please put in the comments. I'll send you a link and see if we can get you in there. It's an opportunity. If you've got something that you would like to bring up or anything that you would like to know about or share with us, does give you an opportunity to kind of have that platform, and it gives me an opportunity to really hear back from you all. I just love hearing what you guys have to say as well. I think it's an incredible forum for all of this. So with this, we've got a lot of things going on in this market, pre-market. We've got some earnings coming out and other stories I will go over with you, of course. We did have the Fed come out and speak yesterday about basically doing nothing, not changing the rates, which was 99% of what was expected. But let's go ahead and get into, of course, our favorite risk indicator in order to start the day. Now we've got the MMRI has come down slightly, just about 302. Now we're kind of hovering in this range, still in extreme territory, but it has pulled back a bit. Now, the elements of this, the 10-year yield, as well as the relative strength of the dollar. The kicker here is that the relative strength of the dollar is staying strong. This is mostly on the new policies that are coming out. Now, with this, we've got the 10-year yield paired in, but pulling back. Now, as the 10-year yield is pulling back, the dollar did drop slightly from yesterday. That together combined will give a bit of green to the markets. Right now, they're in the red pre-trading for the most part. There are some underlying movers. Gold staying strong, approaching 2,800 and looking as if it can continue. Silver also beginning to increase. Now, these are the safety plays. They're safe havens for the money, but the futures are showing green as well. So it's the money that could move in. Oil is the weak one here, and volatility dropping after the Fed decision passed, even though everyone pretty much knew they were not going to do anything. So with all of this fear greed, we're back in neutral territory. We've got more retailers jumping and pouring their money in, again buying the dip. So what's our daily driver for today? We're getting homes numbers, looking at jobs, which is going to be critical moving forward. And then also we are looking at the PCE on Friday, go over the calendar in a bit and why I've got that up today. Now, cryptocurrencies, along with the risk on, risk off, these are risk assets. And Bitcoin is back above 105,000, but there's been quite a bit of buying going on. More details in a moment. So, an issue we've got here, but it doesn't seem to be hurting across the globe as much as one would think. But this is what's strengthening the dollar, a portion of it. We've got current administration, foreign aid freeze, sparking a global funding crisis. Now, this is because globally they all depend on the US dollar, still the reserve currency, and the flow of it. So, if they are not getting these fundings, which is inflationary, it's going to cause a credit lockup overseas. Now, with this, we've got the Eurozone, their economy unexpectedly, in the headlines, unexpectedly stagnating in the fourth quarter. We've been talking about Germany, the manufacturing, the decline, the loss of jobs and loss of retail, loss of spending in the UK as well, and other nations over there. So I don't know who had their eyes shut that they were not expecting that, because that seems a bit ridiculous to me. So the ECB is expected to cut their rates. Now, understand, when they cut those rates for the European Central Bank, you're going to watch their stock market rally. As their stock market rallies, depending on the depth of that rally, so to speak, some money could flow out of the US stock market because money is looking for the best return. So we also heard that the US economy likely slowed in quarter four. I don't know what they're looking at to say that it's only likely slowed. It's obviously slowed. But let's go into the calendar really quickly. Today we are getting the United States GDP and initial jobless claims. We'll be watching those. Home sales, I've got a bit more on that coming forward. We've got the PCE. Now, this is coming out pre-market tomorrow and core PCE. So this could be potentially pre-market mover if you're doing swing trades set up prior to it. And there's a lot of headline-driven stuff going on. Speaking of headline, you're not going to be able to avoid today. It is a massive tragedy. Passenger jet with 64 aboard did collide with a Black Hawk Army helicopter while landing at DCA. Now, there were Russian skating stars ahead. It was coming back from an ice skating competition, major one. So, quite sad. But the way that it played out, the larger question is who is in that Black Hawk and who is driving that? Because that's really the crux of it. If there's nothing there, then someone at the tower is going to be losing their job. So with this, we've got putting this here, a lot of attention going to the Super Bowl. And this is a gauge of how much your eyeballs on these ads, on these advertisements, on the propaganda they're going to be putting out is worth $8 million. $8 million for these commercials is we've got a lot of lack in the retail services and the economy in real life, not what they're saying in headlines, real life is hurting. Now, contrast to this, we've got Caterpillar came out with really good profits on expectations of higher than anticipated demand for construction. Well, probably going along with all of the repairs from the devastation from the wars, everything now that we're done, completed the bombing phase. Now is time for the clean-up phase, and that's where these come in. Note, these have moved offshore and are now manufactured in Mexico. So, another sign of a weak economy, Dow Chemical, cutting 1,500 jobs as it's struggling to get back to profitability. This was a huge C19 player. They were up and coming. Now, let's put this kind of together. This is a thread, if you will. We've got negative equity on the rise, and this is in a major way. This is not minor. Negative equity hitting all-time highs. Even car dealers are concerned. Loans are about to default. Now, with this housing, mortgage rates stuck at 7% as the Fed holds steady on interest rates. So we've got high interest rates, and the property market is about to get flooded in particular areas that could cause a major issue. Now, there is something called the wealth effect, and that is if people believe that their homes are worth more, they're willing to spend more, or also in reality, they can refinance their houses or sell them. Now, in this market where it tightens up, they're no longer able to sell them or refinance them. It means less spending. So we've already got negative equity up on in cars, vehicles, homes, and this is going to affect spending, and it's showing already. Now, this spending or lack thereof is the doom loop beginning, because that leads to more job losses because companies cannot stay profitable. So, early example, UPS cut their Amazon business by over 50%. So with this, their stock is tumbling down. Their revenue missed. So this is a major harbinger of what is to come. We've also got Whirlpool. They make appliances, kitchen appliances more specifically. They dropped on earnings, showing consumers are indeed struggling. So let's lighten up a slight bit. Like to hit this with Deutsche Bank chief saying nothing is off limits as their profits are plunging. So can't get out loans. These high rates are hitting them. we are going to get lower rates. They are going to inflate more, and they're going to start more of these programs. They have to inflate more. So more inflation coming, prices going up, job losses at the same time. So we've got tightening into a dropping economy. That is stagflation and a signal for danger, probably 3 to 6 months down the road, if you will, if not sooner. No one knows the timing specifically. I certainly don't. But the signs are that it's coming. So we've got BlackRock buying Bitcoin for the 8th day in a row. This is how much it holds. So I just cut all of the suspense. 572,616 Bitcoins since the launch of its ETF. They are building themselves. They just purchased an additional 11,000 the last 7 days alone. So they're purchasing the asset, loaning out paper against it. Master scam. So we've got El Salvador rushing into a new Bitcoin law to comply with an international monetary fund deal. The IMF kind of heading them again. Now, what they're doing is not a major turn. They are just pulling back on the requirement that businesses accept Bitcoin as the only payment because it is their national currency. Now, they're allowed to accept other currencies as well. So, not a major move. Meanwhile, while they've been bashing Bitcoin as money laundering, former Senator Bob Menendez, who fought against them adopting it, just got sentenced to 11 years for taking bribes in gold and cash. So, just to show you, it's not totally cryptocurrency that is taking the heat on this stuff. So, a couple other things I'd like to go over first, just to kind of lighten it up for you. What the White House meant when it said our last administration directed the mass killing of 100 million chickens. So, apparently, they are on the line for the heat of some of this going on. This, just say, is another attack on the food supply. As I said, this is kind of in the Discord, we were talking about this, but how it has crossed species. We spoke about this yesterday, that pretty soon, other than mad cow, you're going to have mad chickens. So we've got mad chickens running around, ducks. They've culled so many poultry farms. Now they're starting the beef farms, as well as the milk. It's massively inflationary for food, prices going up again. So expect that. And I just wanted to bring this last one in, which was also massively inflationary, the profligate spending of the White House. Now, they found that part of it is that the United States spent $50 million on prophylactics for Gaza. Now, there's, yes, of course, an agenda behind this, but current administration accusing predecessor of wasting taxpayer funds. But there's more to this story. So during the 2018 tensions between Hamas and Gaza, the story as this is held is that the Israeli military accused militants of using balloons made from these to send incendiary and explosive devices across the border. Now, these improvised devices triggered hundreds of wildfires. This was in the news back at the time. Now, at that time, the IDF or the Israeli Defense Forces had no idea where these might be coming from, as they were not produced locally. Now, I don't know who picked these up or tested them, but apparently they knew. So the World Health Organization had denied supplying them with these. So where did they come from? I'm not sure, but war is weird. So with this, I'm wishing you a wonderful day, and until I see you again, my friends, stay free.